Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have KERING, ticker is PPRUY. Price at the point of funding is $510. Let me first say this is not a recommendation, not advice. Please do your own diligence before investing into anything. Let's get right into it. KERING owns one of the world's most valuable brands, Gucci. A decline in share price over the last couple of years have left it trading at a 17x earnings, which seems modest for a company with these assets and a history of enviable financial performance. There are some reasons for pause, including a slowing growth and change in the creative director position at Gucci. For those that can stomach the recent challenges, I believe this is an opportunity to invest in a great business at a price that might seem cheap in a few years. KERING is a French company controlled by the Pinault family, and KERING owns Gucci, Yves Saint Laurent, Bottega Veneta, Balenciaga, Brioni, Alexander McQueen, Maui Jim, and more. These are some of the most valuable luxury brands in the world. Over the past few decades, the family has slowly turned its conglomerate from a basket of diverse, mediocre businesses in difficult industries into a concentrated luxury portfolio. The company was founded in the 1960s by the father of current CEO Francis Pinault. It was originally a timber trading company and grew via acquisitions into a diversified conglomerate owning disparate businesses in industries such as retail, distribution, manufacturing, and others. The story began to change in 1999 when the group bought a 40% stake in Gucci. At that time, Gucci was publicly traded, and LVMH's Arnold had accumulated a plus 30% ownership by buying shares in the open market. The Pinaults were brought in as a type of white knight and bought their participation through a dilutive transaction. A few years later, KERING bought the rest of Gucci and became 100% owner of the company. In 2003, Pinault Sr. handed the reign to his son, who is the current CEO. Francois Henry has followed the strategy of disposing the retail business and concentrating the company in luxury. He also tried to get KERING shareholders he also tried to get into the sports business by investing in Puma and Cobra Golf, but these ventures did not prosper and they ended up exiting these businesses. Francois Henry has commented how at the time of the original Gucci investment he knew close to nothing about luxury, but through his board participation got to know the business and the positive qualities. KERING shareholders have benefited enormously from the move into higher quality businesses. It is important to note this move of reducing complexity and focusing on smaller operations of higher quality businesses is not usual. Most families might try to expand their empire and grow by all means. The Pinaults have significantly shrunk their asset base by disposing tough businesses and focusing on the best. While this is subjective, it seems like management is highly underrated. Highly. The family has a vision of investing for the long term in order to nurture and drive the strengths of their brands. KERING has proven to be a great home for these brands as they have benefited from being under the company's umbrella. For example, a decade ago, Yves Saint Laurent was a marginal business with 400 million in sales and roughly break even. After years of nourishing the house with a long-term vision and good management, it is now at plus $3 billion in sales with a 30% margin. Same with Bottega Veneta. When the company was acquired in 2001, it was a $60 million revenue business relying mostly on third-party distributors. Now the company does 1.7 billion in revenue and plus 20% margins while controlling most of its distribution. Over the last few years, KERING has taken the tough decision of reducing reliance on wholesale, department, and specialty stores. The strength of the brands as they can control the environment, improve customer experience, and react faster to. Sorry, what? Reducing reliance on wholesale, department, and specialty stores. They have invested in their store base, and a plan is to do 85% of the company's business directly. They are close to this objective. While this decision has probably hurt short term, it should help over time in driving the strength of the brands as they can control the environment, improve customer experience, react faster to changing trends, etc. There's significant evidence that KERING has been a good owner. This has been backed by financial results. Over the last 10 years, EPS has tripled from $10 to $30. Net debt has remained very low at $2 billion, and a company has returned more than $10 billion to shareholders. Share count has gone down from 127 million to 122 million, and share price has quadrupled, and TSR has been plus 70% per year. Luxury, a good place to fish. Brands such as Gucci are quite scarce assets, which can be incredibly profitable and durable if taken good care of. Brand exclusivity and customer desire is earned over decades of consumer reinforcement. It takes time for a brand to earn a position at the top, and true luxury brands rarely pop out of nowhere. Brands such as Gucci, Chanel, Louis Vuitton, and Hermes have, for the most part, remained at the top for decades. There is some component of fashion and the possibility of mismanagement, but the point is true luxury logos are rare and durable. People want to express their class and even wealth by showing they can wear the same shoes, leather bags, or jackets as the wealthy and famous have done for their whole life. Another positive aspect for investors is that brands have the ability to raise prices, and by doing so, in some weird aspect, they might drive exclusivity. It is an enviable position where you have a durable brand that might get stronger if you charge more of it for it over time. The luxury markets have tailwinds such as society's growing wealth and a middle class that wants to wear and show their success. Finally, these brands have scale benefits in terms of research, advertising, real estate, etc., on top of years of accumulated advertisement and brand building. The market generally recognizes these attributes. KERING's peers trade at premium multiples. For example, on earnings, they trade LVMH at 25x, Hermes 50x, Moncler 27x, Richemont 22x, Cucinelli 53x, etc. These are high margin businesses with relatively low capital requirements and high ROEs. True luxury brands are quite scarce. Financials back these claims. Gucci is a $10 billion brand with plus 35% operating margin that has grown sales at 11% per year over the last decade. LVMH is one of the best performing large cap stocks in the last decade. The list goes on. Why this opportunity exists. Number one, problems at Gucci. Over last few quarters, growth at Gucci has slowed. On top of that, the house decided to change creative director, and this creates some instability. It is an important job as this person is responsible for the new collections. While can't be brushed aside, I think the brand has a significant legacy and power to navigate this episode. The logo has a loyal clientele, and that should remain a customer over time. That should remain customers over time. Also, the team at KERING has gone through two similar episodes in the last two decades. Second, Balenciaga. The controversial ad campaign caused immense repudiation and upheaval. This definitely hurt the brand and was an unfortunate error. While Balenciaga will feel the pain of this episode for a long time, and it was a terrible mistake, the business is not highly significant for KERING. They can't survive this, and it might prove to be a lesson in terms of control over time. Third, recession. Past few weeks, there has been some data coming out that the US consumer has slowed down consumption in the luxury sector. There might be some pain over the short term, but my guess is the US consumer will eventually recover and thrive over time. There are some tailwinds coming from China as reopening and travel gain some steam that might counterbalance a slowdown in other markets. Fourth, fashion risk. In the end, these brands depend on consumer preferences, and these might change suddenly. This is a real risk that is difficult to quantify. There have been some indications that Gucci's desirability has taken a hit as of late, especially in China. This will continue to happen in cycles over time. KERING is trying to push their brands to focus on lasting, classy products in order to minimize fashion risk. They call it sustainable elevation. My bet here is that Gucci is a special brand that is strong enough to remain aspirational for the consumer over decades. I'm also comfortable with this team in terms of them being incentivized and having the capacity to invest for the long term. Gucci is probably more dependent on fashion, as its products are a bit flashier or less traditional compared to LV and MS. Having said that, think evaluation discounts, that, and more. Over its 100-year history, Gucci has survived periods of serious mismanagement, including a family feud in the late 80s, early 90s. Also, changes in directive directors, with the feud and exit of Tom Ford, and in 2015, KERING changed the CEO and creative director. This ended up being quite a successful change as the brand was reinvigorated and results were quite good over the following years. While no guarantee of success, I think it says a lot of a brand that can survive difficult periods. China, fifth. Roughly one third of Gucci sales come from China. While with all the geopolitical uncertainty and lack of clarity, investors must take this into account. It is impossible to diversify away from such a market. 6. Pinot and a conglomerate discount. Mr. Market dislikes family controlled conglomerates and values them as such. My guess is investors might be scared of how the business is managed and capital allocation. Francois Henry has proven to be a capable executive over the last 2 decades with solid financial results while focusing on the right things. He has executed the strategy of focusing on the luxury sector and disposing the rest of the assets. He has also pushed the strategy into a global enterprise and away from its dependence on the French consumer market. Pinot is not an empire builder with a huge appetite for large acquisitions. He has been measured and strategic. For example, over the last decade, KERING has only spent net $2 billion in acquisitions. They have not increased debt levels or issued shares. Few random facts: he studied computer science and co-founded a CRM business with fellow students. He's married to Salma Hayek. Valuation. In 2023, KERING should earn close to $3.7 billion or $30 EPS. KERING trades at a 17x earnings or 6% earnings yield. Over the last decade, revenues and earnings have grown at 12% and 14% respectively. This while returning most of the cash flow in the form of dividends and, as of late, some buybacks. At current prices, we're paying very little for the optionality of the future, resembling something close to the recent past. While I don't expect these results to continue, my guess is if the brands remain strong and sales/earnings grow mid-single digits, we should do very well going forward. Think in 3 years, the company should be doing something close to $40 in EPS. My guess is at that point, the market might assign a multiple that reflects the quality of the business and something closer to its recent past, say 22x. That would yield a $880 share price. This corresponds to a 70% plus return or 20% per year. This 22x multiple is not aspirational, as KERING traded at these levels prior to COVID and even traded between 25 to 28x during most of 21. In a bullish scenario, we might reach something close to the medium-term guidance for the brands. Shares might plus 2x over a similar period. Last year, a company indicated that in the medium term, Gucci should do $6.1 billion in revenue and 41% margin. Yves Saint Laurent, $5 billion revenue and 33% margin. Eyewear, $2 billion revenue and 15% margin. These are many numbers, but my guess is if they reach something close to those figures, KERING should be doing a plus $50 in EPS. That would only happen if brands are doing quite well and the multiple closer to LVMH might be appropriate. Understanding Gucci has higher fashion risk and less durability than LV. At 25x, stock price might reach 1,250 in an upside scenario. All mentioned figures are in euro, not US dollars. Catalyst. New creative director should show some of his work in September. That might help remove uncertainty. Economic recovery, especially in China. Continued performance and growth at Yves Saint Laurent. Thank you very much for tuning in. See you next time. Please write down in the comments below what you think of this idea and what you think of luxury brands in general, or investing in luxury brands in general.